You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView, and in today's video, we will be breaking down a pair both from a technical and an order flow perspective to understand where are the best probabilities for a trading opportunity on the pair to obviously be capitalizing on it. So the video will be both very educational and practical, so without further ado, let's get straight in it. Okay, so there are three things that I will be covering in today's video. Number one, I will be giving you guys a full update of the situation that currently we have on GBP AUD to see where is the next opportunity for the pair. Number two, I will be speaking about how you're supposed to be approaching your trading in a ranging market, which is the situation that currently we have on GBP AUD, as you will see from a daily perspective. And the third thing that I will do is give you guys a full update of the situation that currently we have on Euro NZD, because it's a very interesting pair for a trading opportunity. And obviously I want to show you what kind of situation we have and how we can be looking to capitalize on the next move of the pair. Now, one very important thing to say, the way in which I will be structuring the analysis is as educational as possible, because first, we will be breaking down the market from a technical perspective. We will then go and see what we have from an order flow perspective on all the different currencies. And obviously, if you're able to read how hedge funds, so the biggest speculators in the market, are shifting their positioning, you're able to understand where are the best probabilities for a next move in the market, and you're able to position yourselves together with them, which obviously gives you an advantage over your competition in the market. So let's start from our analysis on GBP AUD. Now here on GBP AUD, what we have? Starting from the monthly, we have a market which clearly has just tested a very strong monthly demand area. In fact, this zone was very strong demand preceding all this move to the upside, and the market has tested this level twice, the first time here and again here, and rejected the zone to the upside quite aggressively. And what you do expect from here is for the market to create a deeper retracement. Why a deeper retracement? Retracement because this was the impulse. So if the market is to be making a move to the upside from here, this isn't a simple move to the upside, it's a retracement from this major impulse. And there is a general way that you can use to measure retracements in the market, which is taking your Fibonacci from the high to the low of the impulse. In fact, if you take your Fibonacci from the high to the low of the impulse, what you can see is that we have a 0.382 Fibonacci retracement, which is exactly in this area here. And why is this a quite strong confluence of resistance at which the market could be easily attracted? It is a strong confluence of resistance because it is the previous support, now turn resistance, in confluence with the 0.32 of the Fibonacci taken on this impulse. So a strong confluence zone at which the market can easily be attracted. Going down on the weekly time frame, what do we have? Now on the weekly, price action is quite clear. We have a market which is stuck in between support and resistance. Why do I say stuck in between support and resistance? Because what we can see here is that on the upper 8 zone of the channel in which the market is currently stuck, we have the previous resistance here, which is now again resistance here. So we do have the possibility to create this head and shoulders and create a continuation to the upside, to the downside. But at the same time, we also have the demand that the market has found at this low, because we can clearly see that exactly from this area, the market has started all this move to the upside. So this zone is now again demand, and the market has just tested and rejected this area to the upside. So currently what we have is a market which is stuck in between support and resistance. Going down on the daily, what do we see? Now on the daily time frame, we see this even more clearly, and we can identify our range in an even more accurate way. We can clearly identify that the resistance and the top area of the range is exactly this zone here, and the bottom part of the range is exactly the support that we have all across this area. In fact, we can see that this structure area was acting as support here, again support, 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 and support. So clearly we have a market which is bounded in between the resistance and supports that we have here. Now, when you have a market which is inside of a range, okay, you don't want to be looking for trend continuation patterns or anything that is, in the direction of a trend, because anyway, you don't have a trend, because if on the daily you are stuck in between support and resistance, you are stuck. So the best patterns are W&M formations. They work very well in a ranging market. In fact, I had made a full breakdown of GBP AUD after the market had created this M pattern. When the market was here, I made a full breakdown here on YouTube explaining all the reasons for which from here we wanted to see a move to the upside to go and complete the pattern at the neckline, because in fact, when you have an M formation, what you want to see is the market go and complete the pattern exactly at the previous support that is now turned resistance, and that is in fact exactly what the market did. And that is the pattern that usually is the most favorable one when it comes to ranges. W&M patterns are exactly what you want to be looking for inside of a ranging market. So at the moment, we don't have any opportunity on a GBP AUD until the market will remain bounded in between this support and resistance. But if inside of this area the market will create any kind of W or M formations, then I will make an update and I will show you what we have, because definitely it will be interesting for a trading opportunity, as it has already been when the market tested this area and I made the full breakdown here on YouTube. So GBP AUD, this is currently the situation. Just a quick check at what we have from a COT perspective on the pound and on the AUD, and then we will move to Euro NZD, which actually has the possibility to provide a very good trading opportunity at the start of the week. So just a quick check at what we have on the commitment of traders. Now on the pound, what we can see is that the net positioning went from having a 12.7k net positions all the way down to having minus 17k net positions. This means that we went from having more longs than shorts, with 46.5k longs and 33.8k shorts from an institutional perspective, all the way down to having more shorts than longs. So the completely opposite scenario, with 47.9k shorts and 30.8k longs, with minus 17.1k net positions. So the pound is getting quite weak. And if we go and see what we have on the AUD, we can see that the AUD is getting weak as well, with net positions going from 16.3k all the way down to minus 5k. So we have a weak currency against a weak currency, which is quite easy. So at this point, it's quite easy to understand why the market is actually ranging. The market is ranging because you have a weak currency against a weak currency. And if you have that kind of situation, you expect a range, because if you have a strong currency against a weak one, you will have an uptrend. If you have a weak currency against a strong one, you will have a downtrend. But if you have a strong against strong or weak against weak, you will have a range, which is in fact exactly what the GBP AUD currently has. So until the market will remain in this range, the only interesting opportunities are W or M formations, and I will try to keep you guys updated also here on YouTube if the market will provide again something interesting on GBP AUD. And I don't know if I already said it, but the previous analysis in which I explained all the reasons for which from here we wanted to see the move to the upside is linked in description, so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next videos. So now let's go and see what we have on Euro NZD, which is definitely more interesting for a trading opportunity. So let's make a full breakdown from the start and delete everything. Perfect. So starting here on the monthly time frame, what do we have? Now from a monthly perspective, we have a market which currently is testing this trend line. And this is a quite important trend line from a monthly perspective. It has been now just confirmed with the start of this move to the upside. So on the monthly, we have support and we can expect a move to the upside in a stronger way than what we are already seeing. Going down on the weekly, that is where things definitely start getting interesting. In fact, there are two things that we can notice from a weekly perspective. Number one, we can see that the market has just provided this overextended M formation. And after an overextended M formation, what you want to see is the market create a retracement at least to the 0.32 of the Fibonacci taken on the impulse leg. So you expect the market to create a retracement at least to this area here. Now on this chart, the 0.32 must be measured from this high to this low, which is the impulse leg. which gives us already an upside target, which is at this zone here. So starting here on the weekly, we already have exactly what we wanted to see. So a target to the upside. We already know that from a weekly perspective, we expect Euro NZD to reach this first upside target. Going down on the daily, what do we see? Now on the daily, we can see that things are getting even more interesting, because on the daily, we can see that the market has another overextended W formation, down, up, down, and up. And as I just said, in the case of an overextended M formation, you want to see a retracement. Same thing for an overextended W formation. You want to see a retracement at least to the 0.32 of the Fibonacci taken on the impulse leg. So also in this case, what we do expect is for the market to give us a retracement at least to the Fibonacci, to the 0.32 of the Fibonacci taken from this low to this high. And we can expect the market to start a retracement quite soon, as it definitely seems overextended to the upside at the moment. So we do have two opportunities here, not only one, because we know that our overall upside target is here, but at the same time, we also know that we expect a retracement. So we can first be looking to capitalize on the retracement, and then we can be looking to capitalize on the continuation to the upside for the market to actually reach our upside target. So how we will be approaching these two opportunities with students. Now, before I show you this, let's first go and give a quick check at what we have from a COT perspective, so commitment of traders on the Euro and on the NZD. Now on the Euro, what we can see? On the Euro, we can see that with the last report, hedge funds have added 2.8k long positions, bringing the net positions again from 133k to 138k. And it's already two reports in a row that hedge funds started adding again longs. So it seems like the profit-taking phase is now over. Why am I saying the profit-taking phase? Because in the long term, we can see that we went from having a massively bearish positions from an institutional perspective on the Euro with 271k shorts and 157k longs, all the way up to having 211k net positions with 262k longs and 50.3k shorts. So we went from having a quite negative net positioning to a very positive net positioning, meaning that what we can expect is some profit taking, which is exactly what we got. We have seen tens of thousands of long positions getting closed on the Euro. Minus 11, minus 2k, minus 17k, minus 5k, minus 10k, minus 3k, minus 12k. So tens of thousands of long positions were getting closed on the Euro because we had reached a maximum amount of longs that institutions could hold on the Euro. But now is two reports in a row that we see again longs getting added. So we definitely can expect more Euro strength, which means that after a retracement, we can definitely expect a continuation to the upside. And if we go and see what we have on the NZD, we see a very similar concept of what we have already seen just now on the Euro, meaning when we have an extremum in the market, what we actually expect is for the market to start for the market makers to start some profit taking. And in fact, we had it here, and now we can expect it on the NZD. Why? Because on the NZD, we just reached a maximum amount of longs that they can hold. Okay, we have 32.2k longs. So this can easily be a maximum, meaning that at some point they will need to create some profit taking. And if they will create some profit taking, NZD weakness is definitely possible, meaning that the continuation to the upside is definitely possible if institutions start closing their longs on the NZD. So as you can see, things are lining up quite nicely with what we want to see from an institution, from a technical perspective. So how we will be approaching this with students? Now, after this overextended W formation, what we expect is a retracement, but you cannot just enter short. Why? Because trading is reactive. Trading is not predictive. And the monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the directional aspect of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours. But if we go on the 4 hours, what we can see is that at the moment, everything is still bullish. The market has been creating higher highs and higher lows without showing any sign of weakness. So at the moment, we absolutely cannot be looking for any kind of shorting opportunity. However, things might change in the future, which is exactly what we will be looking for when the market will open on Monday. In fact, with students, what we will be doing is monitoring price action from a 4-hour perspective during this move to the upside, and we will be waiting for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. And as soon as the market will shift from a 4-hour bullish to a 4-hour bearish market, at that point, we will add Euro NZD to our watch list. And as soon as the market will provide to us one of our valid entries, first, we will be taking a nice short. And then again, once the market will reach the 0.32 of the Fibonacci taken on the impulse, we will again be monitoring for a potential longing opportunity. But that I will be speaking about it later on after the market will already have provided us the first retracement. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all your questions every single day. So I really suggest that you go and check it out, and I will see you in. The link is in the description.